Can Bitcoin replace gold? A deep dive into academic research. Can Bitcoin truly replace gold as the ultimate store of value? This question has sparked intense debate among economists and investors alike. While enthusiasts often compare Bitcoin to digital gold, recent academic research suggests that the two assets may serve very different purposes for investors. Here's a closer look at why this comparison is both fascinating and contentious. The case for Bitcoin as digital gold. Proponents argue that Bitcoin shares key qualities with gold: scarcity, decentralization, and a fixed supply. Like gold, Bitcoin is finite, only 21 million coins will ever exist. Unlike fiat currency, which can be printed indefinitely, Bitcoin's issuance is algorithmically controlled and transparent. Its supply is enforced by a global network of miners, not a central authority. This makes it appealing to those seeking a decentralized alternative to traditional assets. However, a 2018 study by Bauer et al. Reveals a critical difference: Bitcoin behaves more like a speculative asset than a safe haven one. During crises, gold tends to hold its value, but Bitcoin's price often fluctuates wildly based on market sentiment. Yet, some argue that as Bitcoin's market matures and volatility decreases, it could evolve into a more stable asset. A 2023 study by Xu and Kinkyo found that Bitcoin may even outperform gold as a short-term risk hedge during events like the COVID-19 pandemic. Volatility, a sticking point. One of the biggest challenges for Bitcoin as a gold substitute is its extreme price swings. While gold has historically shown minimal fluctuations, Bitcoin can jump from $76,000 to $111,000 in a single year, far from the consistency required for a reliable store of value. Research by Klein et al. Confirms this volatility, noting that Bitcoin's correlations with traditional assets are unstable over time. This raises questions: can a volatile asset truly serve as a safe haven? Interestingly, the same study highlights Bitcoin's potential for high upside, making it more attractive to speculative investors than risk-averse savers. This distinction underscores a key takeaway: Bitcoin and gold may cater to different types of investors, with gold appealing to conservatives and Bitcoin to those seeking growth. Inflation hedge. The jury's still out. Gold has long been viewed as a hedge against inflation, retaining value during times of currency debasement or economic turmoil. Can Bitcoin play a similar role? A 2016 study by Diaberg analyzed Bitcoin's volatility using GARCH models and found some hedging properties, but warned that its short history and nascent infrastructure limit its reliability. More recent research by Burri et al. Shows mixed results. Bitcoin may act as an inflation hedge in certain periods but also responds strongly to market sentiment, media hype, and investor behavior, factors not typically associated with gold. Institutional adoption and changing correlations. As institutions begin investing in Bitcoin through ETFs or balance sheets, some academics believe its correlations with other assets may shift. A 2019 study by Corbett et al. Found that Bitcoin's behavior evolves with market maturity. During hype-driven periods, it decouples from traditional markets, but during financial panics, it tends to correlate with equities, unlike gold, which usually moves inversely to stocks. For Bitcoin to replace gold, it must not only maintain low correlation with risk assets but also prove resilient across crises, a challenge it hasn't yet fully met. Conclusion: complement, not substitute, yet. So, can Bitcoin replace gold? Based on current evidence, the answer is still no, and perhaps never. While Bitcoin shares traits like scarcity and decentralization with gold, it lacks the historical track record, stability, and crisis-tested resilience that gold provides. However, growing institutional interest, evolving regulations, and potential declines in volatility could transform Bitcoin into a more gold-like asset over time. What do you think? Is Bitcoin destined to become the new gold, or will it remain a speculative asset? Share your thoughts in the comments below. Goldman Sachs' secret Bitcoin advice for institutional investors revealed. Goldman Sachs insights on Bitcoin, why it matters to investors. The conversation surrounding Bitcoin and cryptocurrencies is shifting dramatically, and it's hard for institutional investors to look away. Why? The total value of the cryptocurrency market has surged to an impressive $120 billion, and Bitcoin itself has experienced a mind-boggling increase of more than 200% just this year. Goldman Sachs Group Incorporated, a major player in the financial world, has recently communicated to its high-profile clients that it's time to pay attention. Analysts Robert Boragirdi and Jessica Binder-Graham highlighted in a Q&A sent to clients, whether you believe in the value of cryptocurrencies or not, real money is at stake, and it deserves your scrutiny. But here's where it gets controversial: the earlier debates about whether cryptocurrencies are legitimate have morphed. Now, the focal point is how quickly new companies in this space are managing to fundraises. Initial coin offerings, ICOs, now garner more investment than traditional early-stage internet ventures. Here are some key insights that Goldman analysts provided on critical questions relevant to potential investors. How can one trade cryptocurrencies in the United States? The landscape of trading digital currencies is evolving. While personal investors have easy access to various online platforms where they can buy and sell virtual currencies, institutional players have largely hung back due to the market's smaller scale, capital structure mandates, and significant price fluctuations. However, tools like block trading are designed to assist in executing larger trades efficiently. Additionally, while Bitcoin options are available on international exchanges, the expectation is that they could soon be introduced for trading in the US market, providing even more avenues for investment. Are cryptocurrencies considered a currency or a commodity? The classification of cryptocurrencies is a complex issue. On one hand, they share characteristics with traditional currencies, functioning as a medium of exchange. On the other hand, their limited supply aligns them with commodities. The distinction can vary based on local laws and specific uses. In the United States, the Internal Revenue Service, IRS, has categorized virtual currencies as property, meaning they don't enjoy legal tender status in any jurisdiction, a significant point every investor should ponder. Understanding Ethereum. Ethereum is unique. While Bitcoin is primarily viewed as digital money, Ethereum was designed first as a platform for decentralized applications, with its own digital currency called Ether. This framework allows for the creation of smart contracts that automatically execute when predetermined conditions are met, making it highly versatile. Nevertheless, Ethereum has faced its share of challenges, notably the infamous $60 million hack involving a group known as the DAO, raising questions about security in this evolving landscape. What is an initial coin offering, ICO? Known for their rapid fundraising capabilities, ICOs involve the sale of tokens and have exploded in popularity. Only this year, ICOs have amassed a staggering $1.25 billion, surpassing traditional angel and seed stage internet funding methods in speed and efficiency, often with just a white paper and an internet connection. This has raised red flags for regulatory bodies like the Securities and Exchange Commission and the People's Bank of China, signaling that while the opportunity is considerable, the potential for risk and oversight is also substantial. Yet, one question remains unanswered in Goldman Sachs Insights: should institutional investors actually consider committing their resources to cryptocurrencies? This is the thought-provoking part worth discussing. Are the potential rewards worth the risks involved? We'd love to hear your thoughts. Do you think cryptocurrencies are a smart investment or a risky gamble? Let us know in the comments. Can Bitcoin really replace gold? Latest research revealed digital gold vs traditional hedge. Can Bitcoin truly replace gold? Let's dive into the latest academic findings on crypto's digital gold status. Jakarta, Pintu News. The debate over whether Bitcoin can replace gold as a store of value has been heating up among investors and academics in recent years. The term digital gold for Bitcoin has become increasingly common, but scientific research reveals that these two assets have distinct characteristics, both in terms of volatility, usefulness as a safe haven, and reaction to economic crises. Bitcoin versus gold, comparing properties and value. Bitcoin, BTC, is often dubbed digital gold because it is rare, decentralized, and has a limited supply of 21 million coins. Unlike fiat currencies, Bitcoin's minting cannot be regulated by central banks, making it immune to inflation and government intervention. In this sense, BTC shares similarities with gold, which has been a hedge against economic turmoil for centuries. However, research by Bauer et al., 2018, suggests that Bitcoin has not fully met the criteria to be considered a safe haven like gold. Gold has proven its ability to maintain value during financial crises, while Bitcoin prices tend to follow market sentiment and experience extreme fluctuations. Other research also confirms that Bitcoin's volatility is much higher than gold, making it less ideal for risk-averse investors. Also read, XRP price surges again, momentum rising, eyeing key resistance. Volatility and the role of a safe haven. One of the biggest hurdles for Bitcoin, BTC, replacing gold is its extremely high volatility. Throughout 2025 alone, the price of Bitcoin moved from under $76,000 to over $111,000, a far cry from the consistent price stability of gold. Research by Klein et al., 2018, found that Bitcoin's correlation to traditional assets is also volatile, making it less effective as a hedge for low-risk portfolios. However, some recent studies such as Xu and Kinkyo, 2023, show that Bitcoin is actually a more effective short-term hedge than gold during certain crises, such as during the COVID-19 pandemic and the Russia-Ukraine conflict. Although it has not been able to replace gold completely, the potential of Bitcoin's new role as a portfolio diversifier is starting to be recognized by institutional circles. Inflation and hedging function. Historically, gold has proven to be an effective hedge against inflation and currency depreciation. Research by Diaberg, 2016, shows that Bitcoin is starting to display similar behavior, although it is still limited by its short track record and immature infrastructure.